professor of MoneyPigTrading and former PhD drug researcher, now a data scientist trader. Today is March 28, 2021. We want to talk about Suez Canal Blockage and how to react and trade on this crisis. So first, what's going on? So basically, there's a really big evergreen rental, cargo ship rental Japanese company, and probably due to this high wind condition, this ship just being blown away and currently is positioned itself to totally block the canal. So all the ships on both sides of the canal just cannot pass through, and it's causing a lot of troubles. So how bad is this blocking? So currently there are about 300 cargo ships being blocked, and these canals account for 12% of the world's seaborne trade. So currently a lot of goods, oil, cars, and all kinds of materials and cattle are being blocked on all those cargo ships. And it's causing a lot of damage to the supply chain that's already been weakened by the coronavirus. So there are a lot of questions on Twitter, like why don't we just airlift this cargo ship? So we have to understand how heavy this cargo ship and how big it is. So it's basically bigger than, if not all, but most of the aircraft carrier in the world. And it weighs at 220,000 tons. This is a gigantic one. And even the most powerful helicopter in the world, made by Russian, Mi-26, it can only lift 20 tons at a time. So based on the current, the weight of the current cargo ship, we need 11,000 rounds or 11,000 Mi-26 to lift this whole thing, which is incredibly nearly impossible, right? Because we only have 400 Mi-26. I know US also have very powerful helicopters. Imagine how many trips we need just to lift this cargo ship. And to lift it is actually very dangerous because if we make the ship imbalance, we can break the ship in half, and that can make the situation even worse. And a lot of people are also wondering why we don't just have a detour to use another route. So Suez Canal is here to connect the shipping route between the Europe and Asia, and that's actually the shortest cut road. And currently, the cargo ship is blocked around on the Suez side of the canal. So one way for all the other cargo ships can do is, if they are going to Asia, what they can do is use a route passing South Africa and go to Somalia. And this route will take 12 extra days. And actually, the most major concern for all the shipping companies are there were, and hopefully not again, a lot of pirates pretty rampant in the Somalia area. And they really worry if they go through that route again, they could be kidnapped by those Somalia pirates. So that's one of the safety is also definitely one of the bigger concern to have a detour. So I think that's one of the reasons a lot of cargo ships still waiting there outside the canal instead of using the detour. And if this blockage continue to become worse, we could imagine there are more shipping capacity between Europe and Asia. We'll start to use this new Eurasian land bridge or China One Belt Railroad. There are actually several roads. I'm just trying to simplify it to show you there are actually several railroad networks shipping a lot of goods between Europe and Asia. The next question is, how long does it take to remove the cargo ship? So it looks like the highest tide in Suez happened at 12:08 a.m. March 30th, 2021. So the international teams are trying really hard to float the cargo ship by removing a lot of debris and soils to make sure both end of the cargo ship start to expose, and hopefully it will float itself. If it still doesn't move and float, looks like the Egyptian government just announced that they will start to unload the cargo starting on March 30th daytime, which will take a couple of weeks, like we mentioned, and it's quite a very dangerous and time-consuming operation. And if that happens, we can imagine this canal blockage could last at least for a few more days or a few more weeks. That potentially can make a lot of inflation or goods price to go up, and also the oil price. So to position ourselves as a trader, we have to look at the crude oil price, because there are so many crude oil passing through this canal. Naturally, we can see if this blockage being prolonged, the energy price, especially crude oil future price, can start to skyrocket. Not to mention, there's an OPEC meeting in next week where we deeply anticipated that OPEC will continue to cut their oil production and boost the oil price. So currently oil has been up since October until about 10 trading days ago. It started to pull back, holding the EMA support, and now going to have a golden crossover soon, we hope. And if that happens, we're going to see crude oil start to spike up. The other one is to look at is energy stock, XLE. In the past 10 years, XLE actually had a really strong seasonality starting in the end of March to April 29th. It go up to 8.9 percent in the past, 7 times in the past 10 years. We see some weakness around the end of March, like we mentioned in the last video, because Fed SOMA started to pull some balance. That's why we're usually seeing a lot of weakness at the end of the month. But now the XLE started to pick up the momentum, have a golden crossover. If crude oil start to hold here or start to bounce even more, we can see the energy XLE ETF start to break the regional high of 55 and test the 57 and 62 target in the next few weeks. Also, if you prefer individual energy stock, here's an example, COP. Also have a really strong seasonality starting in April. In the past 15 years, COP moves up on average 10.72%, 13 times between March 18 and April 29. Again, because of the month-end weakness, we're seeing some pullback, now holding the EMA support, start to form a golden crossover, and potentially going to retain this 60 area resistance and then test our 66 target in the next few weeks if the crude oil start to hold up or go up from here. But have to remember this kind of energy stocks, their beta are relatively high, so that means it's a more volatile name to trade. So make sure to position yourself, don't oversize or have a hedging to protect your position. The other shipping stock that we really like is Rail. This is actually a freight car company, so it's not directly a cargo ship related company. It has picked up the momentum since the canal blockage. One of the reasons, of course, is this sentiment analysis, right? They'll just pick up together with the whole shipping sector. But also, like we mentioned in the previous slide, if this blockage continue to prolong, more and more shipping will go through railroads. So that's why a lot of freight car stocks actually started to pick up the momentum and move pushing up to the upside. And this name not only because of the Suez Canal blockage, but it's also because the Keystone pipeline being suspended. So a lot of crude oil now from Canada, now if we want to ship it down to US or Mexico, we will start to use more railroad. And that will pick up the railroad order, freight car orders from this particular company, Rail. So currently, the 565 and 612 next resistance are all being tested in the past 2 days. The next resistance being holds 612, we're going to see tested in 859. If 859 holds, we're going to see test at 1255. And there's a really strong gap between 1255 and 15. It potentially might be filled in the next few weeks if we see the blockage continues. And this is also a really good infrastructure plan play because this name will definitely benefit from the upcoming Biden administration infrastructure subsidies. But remember, this is a high beta name as well, above 2. So it will be also very volatile. Make sure to hedge and make sure you don't oversize this position. The other reason we really like this Rail is because this name has been losing money in the past 3 years in every single earning report until last week in the Q4 report, they started to make report a positive earning, and that makes this stock start to turn around again. That's why we really like this shipping stock as well. The other shipping stock is tanker name. Is NAT. We don't have the beta number, but this name is also very volatile, as you can see from the historical level. Our major targets are listed here, $4.65. If take, we have room to $5.39. But of course, we have to see if the blockage will continue. If it does, the shipping costs start to skyrocket, then we might see this NAT and other shipping stocks start to pick up the momentum. The other names to look at is the shipping stock like DAC, PSHG, ATSG, etc. Not to mention because a lot of semiconductor materials are being blocked right now, so we can see the chip shortage will become worse. So a lot of semiconductor equipment names like ASML and AMAT, which had really strong momentum on the past Friday, might continue or very likely continue to go up. And also the semiconductor names Micron, which have earning this week, could continue to have the momentum. Intel had a really positive news on their announcement last week, could also pick up the momentum. The biggest chip manufacturer, TSM, Taiwan Semi, will also have a really strong momentum. And they actually just announced the news about 5 minutes ago that their March capacity is fully booked already again. And UNC is probably like the third largest chip manufacturer in the world. They focus on the lower end chips compared to TSM, focus on the highest end chip. Definitely the other name to look at. Also, of course, AMD and NVIDIA, other names that you might have heard of. So just want to highlight our 2020 long-term investment program. in Discord, which has a very reasonable pricing, had a really good performance, winning rate of 89% and average return trade at 18%. And we also have a pretty decent option-based swimming trading program, have a really good winning rates and average return per trade. If you're interested in joining our Discord community, make sure to check more details on www.moneypigtrading.com and follow us on Twitter, YouTube, and Instagram, so MoneyPigTrading. Thank you for watching.